Ghana has ordered all large-scale mining companies to sell 20% of their entire stock of refined gold at their refineries to the Bank of Ghana from January the 1st, 2023. Now, this comes as protesters demand for President Nana Akufo-Addo to step down over the economic crisis. The move is meant to tackle dwindling foreign currency reserves, coupled with the demand for dollars by oil importers, which is weakening the local cedi and increasing living costs. Ghana's gross international reserves stood at around 6.6 billion at the end of September 2022, equating to less than 3 months of imports cover. Now, this is down from around 9.7 billion at the end of last year. Well, for a little bit more on this, we're now joined by Ghanaian journalist and editor of the Finder newspaper, Elvis Darko. Elvis, it's been a long time. Good to talk to you again. Akwaba.
Yeah, good to talk to you too.
Yeah. So these are interesting times for President Akufo-Addo. This move to order the gold producers to deliver 20% of their refined gold stock. Tell us a little bit about how he ended up coming to that decision.
Well, actually, the process is not an order to say. June last year, the government and the Bank of Ghana launched a project called the Gold Purchasing Program by the Central Bank, because as at that time, the total gold in Ghana's reserves is just 8.7 tons, and the government, looking at the development in the currency market and global economic situations, realizes that gold is a very good reserve for currency, and therefore decided that to have a good store of value to back the local currency to be important for the central bank to increase the volume of gold. And therefore, he decided that within the next 5 years, starting from last year, the central bank will increase the volume of gold from 8.7 tons to 17.4 tons, which is double the quantity. So the discussion started with the gold producers as of June last year to convince them to come into an agreement to sell part of their gold to the central bank. So it's not just an order or a directive that the government has issued, but it is as a result of almost a year of negotiations with these gold producers in the country. And the current announcement that it will actually support oil imports is that this year alone, because the country lost access to the capital market to access Eurobonds, the foreign currency reserves suffered seriously, and the pressure on the local currency actually led to the cedi declining by 53% from January till now. The cedi has lost 53% of its value. This has actually led to a rising cost of living in the country. It has affected the cost of petroleum products. It has affected the cost of everything in this country. And the government decided that, look, we need to do something about supporting the local currency. So the current arrangement, as has announced by the Vice President, is that the gold companies have agreed to sell 20% of all their gold to the central bank in the local currency, which is the cedi. So it means the central bank will buy the gold at spot price in the local currency, the cedi. Then the gold will then go to the international market to be sold in dollars. Then the revenue will now be used to import petroleum products into the country. Currently, we spend $480 million a month to import petroleum products into this country. And getting the foreign currency to be able to import this is quite challenging. This is in addition to other imports totaling about $10 billion a year into this country. So the country's local currency is really under pressure, and the government is of the view that if this agreement should go through, selling the gold and using the foreign currency to import crude oil and other imports will actually reduce the pressure on the local currency. Right? Currently, when the gold goes out there and is sold, the money does not return to Ghana because there's no law that compels anyone to return those monies. So as the investors are outside the country, when they sell the gold, the money does not come. So although it will be on the central bank's record that Ghana has exported this volume of gold, the reality is that the foreign currency does not return to this country. And therefore, the arrangement is that at least 20% of all exports of gold will return to this country in the foreign currency to support the local currency and actually reduce the pressure on the currency, because it has actually increased the national debt. It actually increased the national debt in cities. And that has also created a serious problem for the government. So the government is trying to actually find ways to bring in more foreign currency into the country to support the local currency, to stabilize it and ensure that the pain depreciation is inflicting on all Ghanaians, including the government, will be reduced.
All right, so the question then must be, the gold producers, for them to give up 20% of their gold, that would mean they would want a fair price, and I suspect government doesn't have enough money to pay full market rates for that gold. And so might they be considering this as a tax almost?
No, the government is going to buy it at market value. The spot price of gold at the time it is ready to be sold,
right,
is what the government will buy it. So the government is actually going to buy it at the market price. The only difference here is that the government is going to buy it in the local currency, which in effect, probably the gold companies may wish to sell the gold rather in dollars and get their dollars there. In the event that the local currency slides, it will really not be to their disadvantage. What I believe the gold producers will be a little concerned about is that if we are selling the gold to you and you are paying us in the local currency, in the event of depreciation, it means that we, the producers, will take the fall for the depreciation. I think that is the only place that I think they may have a concern. But as I said, this is a discussion with the producers for over 1 year before this decision is being taken. It started in June last year. So if it is going to take effect in January 2023, it means that is 1.5 years of discussions with the gold producers. So obviously, they will wish to sell and make dollars. But the government says we want to buy it and buy it in local currency. Though the gold producer will have a case, the other argument also is that these gold producing countries will have been given very generous terms, very generous terms by the country, because the agreements that have been signed for gold production in this country is largely in favor of the companies as against the country. So I think that it will be a balance that though we have given them these generous terms, it's time for us also to make something out of it. So I believe that they will also weigh and look at the generous terms given them vis-a-vis the demand of the government, and will realize that, well, we are operating in Ghana, we have been given all kinds of tax waivers, and we have been given all kinds of terms, and therefore if they are asking for 20%, well, it's a negotiation. And as I said, because I was not at the negotiation, I will not know what transpired, but I can say that the only concern they will be having is the payment in cedis. But once that they have agreed that they will sell to government, it means that that issue has been resolved.
What about small-scale miners? Are they included in this net as well? Because if there is issues with the fluctuation of the cedi, they'll feel a lot more than the bigger miners.
Yes, that is the issue. In fact, by law, all the small-scale miners are supposed to sell their gold to the precious minerals marketing company. Actually, they are not, by law, they are not allowed to export their gold without going to the precious minerals marketing company. So I think the government is trying to enforce that aspect of the law, that all legal small-scale miners should now go to the PMMC for the sale of their gold. And as you said, if there is a currency slide, obviously, because they are small-scale miners, they will lose a lot. And per the data available, as at the end of last year, they are producing about 30% of the total gold in this country. So that is really significant, that in the event that they take some hit, the impact will be very, very serious on them. interestingly, it's a fact that a lot of these small-scale miners find ways of actually exporting their gold without going to the right procedure. And I think the government is trying to make sure that it clamps down on that process where people are able to smuggle gold out of this country without going to the official records. And that's why they are including the small-scale miners in this arrangement.
How did Ghana get into this position? Did COVID-19 exacerbate it when we saw the globe go into serious economic meltdown, and that Ghana's just struggled to come out of it quicker than other countries?
Yeah, COVID and the Ukraine war are actually largely responsible, because COVID forced the government to spend more than what it had originally planned to spend. And when the expenditure rose to levels, investors expressed fear that the debt levels may be unsustainable and that Ghana might not be able to pay. As a result of that, ratings agencies have actually downgraded Ghana very, very seriously. And as a result of the downgrade, Ghana lost access to the international market to access capital. On top of that, the portfolio investors, also fearing that Ghana might not be able to pay its debt, decided also to exit the Ghanaian market and take away their monies in dollars. And that also put additional pressure on the local currency. And to worsen it all, local Ghanaians also saw an opportunity to make some money off the depreciation. So ordinary salary workers, many people, once they get some small money, they want to change the cedi into dollars so that in a month's time, when there's depreciation, they go and change it back to the cedi, they will make some profit. So all these things actually exacerbated pressure on the local currency to the extent that the local has lost 53% of its value from January till now. And as I said, that's resulted in a very big increase, $93 billion, 93 billion cedis increase in Ghana's debt. Just the depreciation alone has added 93 billion cedis to the public debt. Fuel prices have gone through the roof. Food prices and everything in the country has become so expensive simply because we are an import-dependent country and we import a lot of the things that we use in this country. So once the local currency keeps sliding, all the things we are importing have also become very expensive for us in the country. And that is how the economy has gotten to where we are now.
My dear brother, we're going to have to leave it there. Interesting times for the president and a lot he has to deal with very quickly. Otherwise, election processes can become quite a challenge. But thank you so much for explaining it all so well for us. Medasi. Okay, thank you. All right, that's Elvis Darko, one of our regular contributors from Ghana. He's the editor of the Finder newspaper. And gold producers there have to sell 20% of their refined gold to the Bank of Ghana so that they have gold reserves and they can use this to buy oil because they've run out of foreign currency.